I believe it's never been easier than today for smaller or medium-sized curators to make a name for themselves just by being creative with strategies.
What's your business model? These weren't questions that were raised like 2 years ago. No, we don't need revenue, we need to grow and whatever.
Pendle is one of these where it really solves an issue in DeFi. It enables retail and pro-tail to take levered exposure, and it allows institutions to lock in fixed deals.
The only thing that this space needs to do to be competitive for a while is beat treasury bills. You have to beat T-bills in order to justify the smart contract risk.
GM from beautiful Puerto Rico, and welcome to another Odyssey Roundtable. Today we are joined by Juri, our very regular guest, and Vlad from Tau Labs. How are you guys doing, and how have you experienced the last week and weeks in crypto?
Thank you. It's been a very, very, very busy start to the year. Didn't even have time to eat and stuff. We have a bunch of stuff happening, a bunch of stuff that we're going to be announcing soon as well. It's been nonstop, really. One thing that is very interesting is that regardless of price action, there seems to be two worlds in crypto now, especially in DeFi. Not a lot of people care about price movement that much in terms of where Bitcoin is and where ETH is. A lot of the discussions that I'm having are usually around TVL and stable coins coming on chain. So that's what we're looking at a lot. And that part of the space is, at least from what I see, a lot more bullish than just simple price action. It's probably a sign of the more institutionalization and maturity of the space, but yeah, you never know. Other than that, yeah, I already forgot that I had a vacation over the holidays. So it's January. It feels like it's already May, but no, you got to do what you got to do.
Yeah, relatively the same here. Conversations are very different compared to how they were a year ago. But just generally saying that, yeah, macro or the geopolitical situation impacts all of these discussions right now. So it feels like crypto is a super small and fragmented world right now, and we're just like a tiny, tiny puzzle piece of bigger power shifts that go on all around the world right now. And yeah, we're just here hanging in there, building stuff, and yeah, so many things are happening left and right. It's very hard to keep up with everything. And yeah, as Vlad says, it already feels like May. I mean, the year started super controversial also with the invasion of Venezuela. This already seems like 8 months ago or something, because so much stuff happened in the meantime. But this was just 3 weeks ago.
I wholeheartedly agree. It feels like on the one hand, it's a year of resignation, because a lot of the sentiment is very doomerish. If I look at my normie friends as well, not even only reserved to crypto, everybody is very uncertain about the state of the world, and people want to deny that realization that many of the trends that have sustained over the past couple of decades are simply now coming to an end. And on the other hand, the volatility is accelerating as it's never accelerated before over the past years. Like all of the things that have been kind of, I don't want to say artificially suppressed, but let's say tried to have been contained geopolitical wise, monetary economics wise, economy wise, that is now all unleashing, and there's nothing that is going to stop that pendulum from swinging through. So it's a very nerve-wracking but also exciting times. I do have the optimism that there will be opportunity emerging from all of this. And I mean, at the end of the day, what would be the relevant alternative to not believing that? But yeah, maybe to come back to what you mentioned, Vlad, with the high interest in stablecoins. Would you say that is the number one leading trend in curation and DeFi overall right now? And how have the counterparties changed? How have the venues changed in terms of lending protocols and Curator infra where these strategies are deployed? Can you map us a rough outlook into this year?
So Tau launched its first vault, and we became a curator sometime in April 25. That's when we became a vault curator, and back then landscape was very different from today. You had the four big curators: Stakehouse, MEP, Capital, RE7, and Gauntlet. And then there were kind of these very, very small curators. The space is a lot more competitive today. Stream and 1010 definitely blew up some of the little players. What changed is that there is a lot more hands-on risk management. It used to be kind of a joke between people in the curation space that there's no risk to be done. And there is an argument to be made there. They just have to know the teams. But at this point, with institutional capital coming in continuously and the blow up from Stream and the blow up from 1010, transparency and like risk management aren't just a little thing that we should have it. It's something that people are actively looking at whenever they deploy. It's definitely more risk off in the sense that strategy and what people choose to deploy is a lot safer. There's not as much appetite to YOLO. I mean, it's easy in hindsight to YOLO, black box CD5 protocols. So that has definitely changed. I believe it's never been easier than today for smaller or medium-sized curators to make a name for themselves, even without having a couple of very large LPs behind them, just by being creative with strategies. I do think this is the thesis that we have at Tau. We always encourage, like, internally, I always encourage contrarian thoughts. And it's always the idea of making sure that we do stuff differently, when it makes sense and not just follow the fold and be scared. I have this idea that there is a certain, not overreaction, but that there is more fear than there should be given the fundamentals. Ultimately, this space is a lot more risk averse today. The protocols that are out in the larger stablecoin projects, they're definitely a lot more transparent and open. This can be a bunch of them: Cap Money, Finify, Neutral. All of these guys are a lot more open. Another trend that we see coming out of this is a lot of risk tranching, which I think it's an extremely untapped part of DeFi generally. You can productize risk a lot easier in this space now, given blockchain technology. From what we see from like larger LPs and funds, they're still more than happy to like bring stablecoins on chain. The only thing that this space needs to do to be competitive for a while is beat treasury bills. You have to beat T-bills in order to justify the smart contract risk. Because if a strategy or a protocol or a curator can only give you treasury bill yield, why take on the smart contract risk for no premium and not just buy? So that is kind of the target that I always look at. How many sources of yield do we have from borrow lending, from liquidity management, from CLPs? That actually beats treasury yields? And can we make products around those? Can we make vaults around those? This is kind of where I'm looking at, and I think other curators are kind of in the same area. Borrowing and lending sources of yield are not going to go anywhere because it's like the safest and the most genuinely authentic source of yield. Same for liquidity management, but I see from a lot of stable coins and a lot of funds generally, the way they productize, there's a very big race to bring on different sources of yield and to make, this is where RWAs play a big role as well. Having actual off-chain yield consistently come on chain is something that everybody's hunting for. And that's why I'm a lot more optimistic than others or than I should be. There's a lot of space to grow. I think a lot of the risks of the industry are, people are overreacting to them. Bitcoin and the Ethereum especially are definitely underperforming compared to gold, silver, and other safe haven assets. And whenever these grow, they bring up the entire space with us. So that's kind of when I see it. Curators are a lot more risk averse, and they are more prone to doing actual risk management, which is a net positive to the space. Same for a lot of stablecoin projects. Like we see a lot more transparency dashboards, a lot more stuff moving on chain. And yeah, we'll see where the year takes us. A year is a very long time in crypto.
Would you say that the base of investors and allocators has changed over the past couple of months, or do you see that there are any trends how this will change in 2026? Also in relation to where people are going for yield, because when I look in the DeFi dojo, it's mostly pro-tail, small institutions, high net worth individuals, and like the hot things that are being talked about right there is Infinify, is Avant, is maybe things like Free Drain if you want to go a little more exotic, but it often centers around strategies that are already embedded in like looping somebody else, or that are embedded on like being built on top of something else. I mean, Infinify offers great yield, but the base input of that yield is dependent on the yield of the underlying PTs. I think Avant is also doing quite a few looping strategies, and overall we've seen yields compress. So it is much more difficult even for these players to keep up providing asymmetric yields to the upside. And on the other hand, you just described how the landscape for smaller and medium-sized curators is getting more and more interesting. So the question pops up is, where do they get the yield from? You obviously don't have to dilute your own strategies, but maybe you can map out how the research process has changed, how these yields are identified. Maybe are there already new RWA related yield sources on chain that the smaller ones can tap into, the larger ones cannot due to liquidity constraints? Or yeah, where does the yield come from?
Juri, do you want to jump on this, or do you want me to start on it first? Because I already talked for like 5 minutes.
Yeah, no, it's fine. It's fine. You're the expert on this.
That's a big word, by the way. Yeah. So in terms of yields compressing, it's what we also talk about a lot inside Tau. Darren from iPort told me this, and I told him I'm gonna steal it from him. Max, can we swear on the show, or is it family friendly?
It is degen friendly, so you can say whatever you want.
Okay, this comes from Darren. I told him I'm gonna steal this. I'm gonna steal this expression whenever I have the opportunity. If everybody's fucked, no one's fucked. If the yields are suppressed across the industry, you don't have to beat treasuries, or you don't have to beat 10%. You just have to be competitive to your peers. In the case of curators, you have to be competitive to whatever curator is on your horizontal. In the case of a stable coin, you have to beat whoever is your direct competition. You don't have to promise 15%. You don't have to give 15% yield because you promised it back in July when it was very much attained. And this is, a lot of it is a function of, is a macro function, like we discussed earlier. Liquidity is drying up in a lot of markets. Everybody is allocated in gold, in stocks, and other stuff. The dollar is very aggressively weakening. The yen carry trade is basically almost completely unwound, I think, today. So that's also a very big source of like liquidity not moving anywhere. Retail has been out for a while, and this is what we've been discussing a lot. The reality is that most retail, the average person, they want to take a lot more risk than any institutional player. So meme coins, NFTs, ICOs, that's where retail comes in. But complex structured products where you have to understand finance, rehypothecation, basis trading, it's not exactly very retail friendly, right? So the expectation that we will have other waves of retail come in, and they do what exactly? Even think about, even in 2021, DeFi was very simple and you had rebasing. And that was very simple. It was very Ponzi focused. Even there, retail struggled to go in because it's not easy to manage, right? So it's not an easy thing to understand. And yeah, like you said in the dojo, most of DeFi now is small funds, small hedge funds, high net worth individuals, etc. That's kind of where the space is moving, at least for now. And just the last point on where the yield comes from. Yeah, it's a very, very true statement that a lot of strategies and alts and projects are looping each other, or borrowing from each other, or collateralizing each other. But it's exactly how finance works in general. The thing is, the pie needs to grow like much, much bigger, because then you have a lot more players inside, and a lot more things can be sustainable, let's say, for longer term. Basis trading has been very good for like almost 2 years, but now since 1010, it's not really it's not necessarily the optimal way to go, unless you literally bought the bottom and you just basis traded your way up from there. There are a lot of other strategies that don't function because there's not enough capital in this space. For example, I think options are a woefully underserviced vertical in this space. I definitely look at projects like Risk, who use options a lot. As the space grows and as the overall TVL grows, it'll be possible to combine and do more money Legos, because that's what finance is like in TradFi generally. Whether it's in commodities, in stocks, in of agricultural futures trading, the vast majority is the derivatives markets, and the vast majority of the any financial industry is funds trading with each other, looping each other, collateralizing each other. That's how economies work. People expect for everything that you do to be a very unique source of yield, but not really. I mean, you can only do so much. And very rarely, once every couple of decades, once every 2 generations, you get new financial instruments come up. So that is not going to change as long as, the space is still small. DeFi is at what? 200? No, it's not 200 billion. 180, 190 billion total size.
Yeah, I think it depends on how you relate DeFi TVL to stablecoin overall TVL.
Yeah,
I
just
think that,
DeFi.
especially
Stablecoins are
with looping, it's getting a little tricky to calculate
No, we
the
count
actual
on.
net
Yeah.
capital deployed.
But even so, we're talking low hundreds of billions, which compared to any industry, it's peanuts. It's nothing. But yeah, we're getting there. On the source on RWAs, I'm very bullish. There is the unique selling point of DeFi, of crypto in general, at this point, at this stage, in my opinion, is the fact that you can take capital, you can bring it on chain, and you can create products around it. You can invest in stuff much easier, much faster without an intermediary from anywhere you are in the world. You don't need special licenses or anything else to do DeFi. Even think of how many protocols are blocked in the US and people just use a VPN to access them. This is the USP of the space, and this is not going to go away. We would have to shut the internet down for it. So, as long as that is a thing and you can make money out of a business, bring that money on chain and add an additional 5% or 10% or 20%, there will always be capital coming into the space and there will always be more and more. It does generally have a tendency to act like a black hole, and capital just attracts more capital until you reach a certain size. So that's the longer answer on the longer mapped out answer on how I can see the space.
The trends changing in the broader POS ecosystem. I mean, I could imagine you guys are also dealing with a lot of like institutional and larger depositors who are generally interested in earning yields on their holdings. Now, given that the risk appetite for directional exposure has probably decreased a little bit over the past couple of months, what are you monitoring there and how have things evolved, and what's your outlook for especially the kind of TradFi adjacent, smaller institutions, more professional capital entering the space?
I would say the big word here is once again consolidation. I've talked about this multiple times already. I just also saw today that, for example, Levana is shutting down. So we saw so many blockchains shutting down, especially in the Cosmos ecosystem. So we see fewer and fewer chains. I think there will be a lot of concentration happening on Solana and towards Ethereum, the big guys. Maybe some wildcards, including Canton is one of these super interesting newcomers. But besides that, I think we are just going to see more and more chains shutting down. We have seen this already throughout last year and this year. But on the other hand, we will also see like more concentrated fee generation on these networks, and we are going to see the clear winners. So we are getting rid of a lot of unnecessary stuff. I know this sounds super rude because like all of these projects build tremendous tech, but it is what it is. There has been more infrastructure than demand for using it, and we are seeing this becoming more crystal clear over the months and over the months in 2026, which of the chains will be relevant, which of the chains will survive, and which of those will slowly but steadily vanish at the end of the day. This is what I think we're going to see over the next couple of years, potentially also weeks and months, to be more precise. But yeah, from an architectural perspective, there's not much I would say that is new to POS. The systems are designed as they were designed a couple of years ago already, with the only exception of the Canton. They're doing like some interesting architectural stuff, but that's it.
Vlad, where do you think is the action going on right now, chain-wise and also protocol-wise? If we look at the total amount borrowed, which I think is also like a little more interesting than just looking at the total value lent out, provided in liquidity, most of it is still happening on very EVM native protocols, of course, still very much dominated by Aave, then followed by Morpho. I think Maple is also live over on Solana. I think Fluid has at least a partnership with Camino or with Jupiter. I think one of them for their lending functions. So we see some of these Solana native ones up there. I think Tidro, that's the other fork on Ink, which is Kraken's L2, which I think could be an interesting wild card for 2026, along with Base. But yeah, what chains are you guys currently looking at, and what are the differences in the types of strategies you can execute on each?
EVM is king for us, especially mainnet. Base is something that we're looking at in the near future. I think Coinbase did a great job, and they understood how to play the L2 game. The whole idea of attracting protocols to have to support your chain and then incentivizing directly to protocols that already exist is a great strategy going forward. You mentioned Ink. Ink have an interesting approach. It's very different, and you can love it or you can love it or hate it. In reality, they choose to fork a lot of the existing protocols that are proven, like you said earlier, Aave fork. I think they're doing a fork of Uniswap as well. I'm not sure, but the idea is to kind of build everything not in house, but have an ecosystem with like only its own protocols, and then maybe after that focus on integrating Ink into other protocols. I personally think Base's approach was like a bit better because you don't have to focus to build protocols from scratch or to wait for others to build them from scratch and test them and audit them. Arbitrum seems to be still quite attractive. There's a lot of volume happening on Arbitrum. It's used a lot for stablecoin payments, so it's definitely people are sleeping on it. I think not an ambassador, not affiliated, just what I see.
No, but I think that's an interesting observation because ever since Hyperliquid sort of moved to its sovereign chain stack, I've really not heard anything new or exciting about Arbitrum in ages.
Yeah, Hyperliquid is also a great example, especially with how they want to diversify the types of protocols they have on their chain. Solana is great. I am shocked DeFi on Solana isn't much bigger. I mean, it's growing really nicely, but I would expected it to grow a lot more. It's not yet so high priority for us to deploy strategies on Solana, but I definitely want to do it. It's definitely a target for the second half of the year. Outside of these, honestly, we didn't really look at that many newer chains. Katana is interesting. But Yuri, you mentioned Canton earlier. I didn't look into them in terms of DeFi that much at all. Um, Outside of these, you have the sort of the VC chains, Aptos and Cardano. Cardano, I know, are doing really good effort to try and bring over protocols. Oh, Avalanche is currently in a pretty big effort to incentivize protocols and LPs and projects to come on board. We will have something on Avalanche in the next, I think, 3-4 months as well. So there's still stuff. Incentives are still big. It's just a lot more. They feel a lot more siloed off. And a lot of the incentives, a lot of the deals we see are done a lot more with like big LPs and curators rather than retail. So remember when I think it was Celestia the launch, everybody in the dojo was talking about them, and you got a sense that retail was really interested and like really hyped for it. You don't really feel that now for like their chains. So the space definitely became a lot more corporate in a sense. I definitely think that for a lot of protocols and for a lot of curators, there is a big advantage to get grants and grow on these chains. I don't think there's anything wrong with having chains pay grants or like just straight up incentives to attract capital. They need to build their base somewhere. And from all of these, yeah, if I am to think like in terms of like pure strategy of how they develop their DeFi space, I think honestly Base did it kind of the best. It's very simple and they just incentivize protocols to build on them to integrate their chain. It's really not that much more complicated in complete honesty. You don't have to fork your own things and build your own stuff.
In terms of protocols, where would you say are the most exciting yields to be found between Aave, Morpho, Fluid, Euler, maybe Tidro as well, even though that's very much related to Aave, Dolomite, etc. Is there something where, from the perspective of a curator, one lending borrowing protocol is clearly superior to another, given how many curation vault strategies are based on looping and lending and borrowing? Or would you say that each of them is good for one thing or a few things, and how do these compare in your view?
Definitely very high up there, Morphle. We use it in most of our strategies, not just for looping, but the modularity that it offers is really, really good. We don't just do loops for them. We also do carry trade type strategies where we generate yield on Bitcoin and ETH through other loops that we keep at the rehypothecation much lower. So it's very hard to do that with other protocols. Aave is definitely great to have like sources of yield for over collateralized lending. Outside of that, I think Silo is going to be. I think they took quite a big hit after the stream blow up, but they're definitely seem to be on their way up. A little chill. I think in a couple of hours we're going to be launching a vault. I think 2 hours from now, from when we are recording at least. 2 or 3, don't quote me on that. A new loop vault that we do for Infinify using Silo. And it's very interesting how they do how we did the borrow calculation for the yield. So that's definitely going to be another that's definitely going to be a different source of capital coming on. Dolomite is very
Certainly make sure to send over the link so we can
absolutely.
look for a little bit of distribution there as well.
I am staring at the draft, at the Typefully draft as we speak, actually. Dolomite is also very interesting because they're very close to the administration in the US. And it's kind of the only place where you can get a really good yield for USD1. So we're definitely looking at stuff around USD1 too. And Dolomite seems to be like the place to go for it at this point. I do want to also throw a little shout out to protocols like Term Finance and Term Max. Fixed rates and also Liquidity V2 comes into this conversation. Having fixed rates for borrows is great, especially for risk managers and curators. Because if you lock in a very advantageous rate and another stream event happens or another 10-10 and borrow rate spike, you protect your principal like you can protect your principal like crazy. There's still a lot of stuff that you can do. There's a lot of things that you can look at, and there are a lot of stuff that a lot of strategies and combinations that a lot of people can't do because it takes a bit of time to build the automation for them. And as I said earlier, this is really where Tao shines. We have our own in-house automation. We do it ourselves, and we can execute and launch vaults much faster than a bunch of other curators or somebody trying to do it themselves. Therefore, it's easier for us to be able to snipe these opportunities whenever they come. Maple is also really, and I will pass it to Yuri after. Maple, I like what they're doing a lot. The whole lending product and having borrowers lined up, especially like serious TradFi businesses, more RWA focused. I'm very curious to see where they're gonna go. I know they are cooking some really cool stuff with incentives on IPOR and on a couple of other protocols. So I'm definitely looking at Maple a lot.
Very nice. I think that is a rather comprehensive outlook on what is currently trending. Any last comments? Any vaults you'd like people to check out before you have to go?
Check out the new Infinify Points Max vault with Silo, and in a couple of weeks there will be another very different Points Max vault that we're going to launch out. And also stay tuned in the next 2 weeks for another potential big announcement for Valve that I'm very, very, very excited to share. We've been working on it since the start of the year, and it's moved much faster than we thought. So yeah, those are about
Very
it.
excited for that. Thanks a lot for coming on, Vlad. Always great to have you on the show and listen to your insights, and hopefully see you soon again.
Thank you very much, guys.
Have a good one, Vlad. Well, we can continue a few more minutes maybe on the broader market outlook. So we still see precious metals leading. I think yesterday evening we saw gold hit $5,000 an ounce for the first time ever, if I view that correctly. Just since the beginning of the year, we have risen from 4,300 to over $5,000 an ounce, which is a, let's see, I think almost 20%. It's an 18% rise in price, which for gold is enormous. I mean, that is trillions of market cap being added to this asset. Rare metals, commodities are still leading the rally. PX still pretty close to its all-time highs, has not broken the 7,000 mark yet. Nasdaq still pretty close to its all-time highs, not that far off from the late October, early November highs. Even the German DAX made highs in the mid of January, yet crypto is still lacking behind. So we are faced with a very similar situation as we have in Q4, where crypto is significantly underperforming all the other large asset classes. Bitcoin, obviously, a little less than all the alts, which are still down in the gutter. Things just continued as they are. Do you think we are finally at a point where this will change, or when will we reach max pain, and when will we revert and finally outperform equities again?
That's $1 million question, right? I think again, I mean, we talked about this a couple of times already. It strongly depends on what happens, what's about to happen in this crazy, fast-moving world right now. If things calm down, and at least it looks a little bit like it, and we get some time to breathe and some time just to step a little bit away of World War III scenarios, then I'm pretty optimistic that we have enough room to grow, enough room to eat some market share. But I think what already everyone accepted is that there won't be this bull market, all coins go up only scenario. I think this is very, 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 very unlikely, specifically in the altcoin area, but I can very much imagine that Bitcoin bounces back. I can see that Ethereum finally catches up, eating some market share. Same for Solana. So for all of these coins, there could be a bright future ahead. Sui as well, all of these big dogs, they could bounce back very quickly and we basically get rid of their time. But as long as there is this high level of uncertainty, geopolitically especially, I think crypto will have a hard time. Plus, we also need to see more growth. The attention is not on crypto right now that much. I think that's the honest response here. So we need something that drives more attention back to the crypto ecosystem.
I very much agree. I think people just have too many real problems to worry about in their lives right now, other than magic internet currencies. Though I do think that all the trends of growth in 2025 when it comes to RWAs on chain, equities on chain, stable coins growing, more relevant asset managers making steps to come on chain, all of that will continue. I really don't see a reason why that wouldn't. Whereas on the other side of a same coin, I also do agree with you that, I mean, for Bitcoin, I think the thesis is all right. All the things that would make you bullish Bitcoin when it comes to monetary debasement, lacking independence of central banks, and pressure being put on them with the Jerome Powell potential in indictment there. If you look at just general uncertainty in the world, which should in turn be a positive thing for Bitcoin, all of that is still happening. I do think that it makes sense to bet on this materializing positively for crypto sooner or later. That still makes sense to me. We'll probably focus around Bitcoin, maybe benefit ETH and Solana a little bit if we see more of these significant players plus nation states starting to settle stuff on these chains where they require credible neutrality and decentralization move away from the reliance on kind of a political consensus rather than an algorithmic consensus. I think on the altcoin side of things, that's where the actual consolidation is going to happen, even more than in the mergers and acquisitions of the companies and labs entities behind these projects. Like, a lot of the stuff is simply going to die. There's a few DeFi coins which I am personally excited about holding. From a pure cash flow valuation metric perspective, if you look at sales to price, profit per coin to the market cap, it is still often overvalued, though I think this is one of the very few sectors where you can still bet or speculate on a kind of network and new technology excitement premium being added on top of that. Everything that comes to infra coins, everything that comes to alt layer ones, which struggle to see any adoption, everything that comes to layer twos that see to struggle any adoption, and meme coins at large as well. I do not see a clear path to recovery. I mean, I'm very open to be proven wrong there, but I just don't know what would get people excited there at all over the next couple of months.
Yeah, I think, as you said, everything is being questioned at the moment right now. And I also talked to some builders last week and they said, trying to raise. And the first or second question of the VCs is that they are talking to is, how do you want to make revenue sustainably? What's your business model in that sense? Which is crazy to think of. These weren't questions that were raised 2 years ago. On the contrary, people basically almost insulted you if you said, "Oh, what's the revenue model?" No, we don't need revenue. We need to grow and whatever. And now it's okay, let's look at if there's really demand for what you are building. If there are really people willing to to pay money for this quote unquote service. But on the other hand, I think if you really have sound economics, sound demand behind that, then I think you have a tremendous year ahead of you, because everyone is dying left and right and you're the winner who shines. Everything consolidates and you could be the big winner. And I think that's a big opportunity. So imagine if everything just moves to a few ecosystems and everything consolidates and on-chain activity continues to go up only. Yeah, and then I think with these winners have bright times ahead. So again, it's a two-edged sword, winners and losers. But on the other hand, that's that's how nature works, that's how business works, that's how all of the industries in the world works. So I'm carefully optimistic.
No, I agree with that outlook. I think it is obviously a necessary condition to still provide asymmetric upside and opportunity in terms of yields to entice more capital allocators to come on chain. And to provide these yields, I do think that the large-sized DeFi protocols cannot be overly extractive when it comes to taking out cuts in fees, revenues, etc., which then in turn makes their tokens potentially less attractive. I very much appreciate that a few protocols have come to the realization that they need to adjust their models. I think Pendle is a great example for that. They just launched a revision of their Pendle token a few days ago, moving away from the VE Pendle, which has the voted escrow mechanism where you lock it, I think, for up to 2 years, receive yields for that, and you had to continuously vote every week on the allocation of yields of different pools, and is now moving to a staked version, which might make it hopefully more attractive to liquid funds to allocate into Pendle. Because I think Pendle is one of these where it really solves an issue in DeFi. It enables retail and pro-tail and all the user groups who tend to be a little more on the risk welcoming side of the trade to take levered exposure to points programs and to the positive delta change in yields. And it allows institutions to lock in fixed yields through PTs, which just makes allocating into stuff like USD AI whatever tokenized real world asset, whatever tokenized basis trade like Ethena, and all of these things much more interesting for a broad variety of market participants who all bring different risk tolerances and preferences to the table. I'm very happy to see that. Yeah, I mean, Pendle is one of a few very positive examples. I think that most tokens and most projects simply will not be able to make that transition because we do not see the capital interested in participating in the very degen part of DeFi, where most of the DeFi protocols are still optimized and built for, grow fast enough to sustain any change in revenue dynamics to the positive for these protocols.
Yeah, agree on that.
I think we found a lot of agreement there. I think TLDR is still very uncertain times, kind of tough to have a decisive directional market outlook, but as always, was great catching up, Juri, and see you the next time.
Thank you for having me, Max. Pleasure as always.
Have a good one.